Okay, perfect. Yeah, we said today we will talk about hedging a little bit more, how to do that. And we had a lot of live examples lately anyway from you. And I want to discuss some of those trades and some charts and questions you had and sent over. So I will discuss these particular hedging trades, and if you have others in mind that you practiced in past or maybe having open right now, then we can also of course discuss those trades. Before we do that, let's just do a quick top-down approach again and see if we have setups in making. We expected something yesterday, see what happened. Okay, now on the euro US dollar, it's still ranging there. It bounced again on the 12 and is still at resistance, right, on the daily chart. There we go. So this will be a very, let's say, important and probably interesting area. See if we can get a bounce set up at some point or not. It makes sense if we switch back to the weekly chart and just draw, ignoring the spikes, and just draw the lines below support, right? The previous retracement was like 500 points on the weekly, and it looks like it wants to break, but in case it's bouncing in this area like a spike here, or maybe not a spike, just bouncing, then of course we have room for bounce trades and actually retracement trades back to here, and maybe even back to here. If it breaks the area, we still have our targets up here at 1.4142 anyway. Okay, so far so good. Let's switch. If you have anything in between or you want to ask something, I'll make this quick and then you just shout. USD same scenario. Here we have already a lower point on the chart, and as we said, if we don't have like any, let's say, news or announcements, or if some big banks don't want to interfere here, then we have our target should be at least down here, and later on of course the lows. Still lower lows, lower highs. Right now we don't touch anything because we still expect the retracement, and if we get the first green candle, this is not a bounce trade actually, right? The only thing you could do, but oops, what happened to the chart? A second here. You could do is drawing, come on, a line like this, trying to figure out if this wants to move in a channel. If yes, then of course you have to wait for the price to reach this area first, so actually create a really new low. Right now it could be just a false break and then a retracement. So with other words, no shorts right now. You cannot do anything, it's over. If you are short, then you just manage the remaining position. That's it. Australian dollar, US dollar, that was this scenario. The price made about 70 pips and then it came back down, so we didn't have a really big retracement as expected to the 36. It's our target here is still the support close to 0.89, so all the swing short traders should be still in and targeting this area for now. If that's starting to range here and you see the price is not creating a lower point and actually in the end going back to the 36, then you keep quiet actually and watch closely and see if it bounces or not. Target is still down here, nothing changed for now. The USD yen 4-hourly chart, yeah, remember our support line. What happened yesterday? Price reached that area, it bounced as expected. Always when we have a big trend and a lot of touches on the 12 like here, on the 36 on the lower time frame. So yes, it doesn't mean that it will break everything and move up, but right now we cannot look for shorts if we don't have this scenario. Like, we need actually the price at some point to stop, like no more green candles, and then we need a red candle, and that would be the aggressive way to do it before the crossover. The more conservative way would be this, correct? And if not, if the price just wants to move up again, okay, then we don't have a lower high and we focus again on the longs if it breaks resistance. If not, then you have a nice wedge here and you can trade between the wedge only intraday wise. Okay, let's switch to the Euro Aussie. As I said, I will do it quickly so we can focus a little bit on hedging. Euro Australian dollar. Still moving up, right? Came out of the wedge, so that is not a valid setup anymore. It just moves up and up and up. The trend is the king, and we have again the proof here, but just by watching how that works, right? It's just so powerful. Now for new longs, actually you need that. I wouldn't go for shorts, it's just too strong yet, yeah, or this setup at some point. But right now, because it created new highs, you can just actually look. It's a weekly 1 2 3, right? Don't forget that. Focus on longs until you get something like this. Cable didn't do much. It's still up, but not much power. We'll see. As I said, only a lower time frame, new longs. Otherwise, it would be great. Check the 4-hourly chart. If the price could do a 1 2 3 below here, or at least, sorry, a lower high and then moving lower. This is in a retracement. GBP CAD 1-hourly chart. Remember, we said we were waiting for this. Ideally a 1 2 3. It stopped at the 200, almost hit the 36. Then it's okay if the 200 of course is close, then this counts as well. The retracement was there, and we had a 1-hourly short already yesterday. But it could also be that we get a bigger retracement on the 4-hourly chart before it's actually moving low, and that would be the more, I would say, legal confirmation, right, in the higher time frame. Because the higher time frame is showing or giving us the trend and the bounce on the 36, so it's always best to also get the setup on the 4-hourly. GPJPY still bouncing on support, so there is no there's nothing to hedge yet. It's still very, very strong. Price bounced on support, and we want to make sure, let me check on the daily chart. We want to make sure that it really breaks support. Otherwise, it's just long. There's nothing short yet. Yeah, we need that lower high, and then a clean break of that line, or a setup below here, at least on the 1 hour. Nothing changing. Nothing is changing. You just enjoy the ride still up. Same on the Euro Yen. Look at this. Yeah, we got the bounce. It didn't even go to the 36. Stopped earlier. See if that's a lower high or not. It doesn't look like it right now, but we're still waiting for this. What else are we watching there? Let me check the other pairs. GBP CAD. No, sorry, GBP-CHF. We said a bounce, and this still counts, right? Yesterday I took the line from here closer to the 200 EMA, but the problem when you don't have a clear like bounce on the 36 or somewhere on some EMA, the whole area of support is a little bit foggy or something. Like it's in the fog. It's like between here and here. You still, if you connect these three touches, right, the spike in this, the price is still at support. It didn't really break it 100%. You can even change the angle, ignore that, and you have still 3 touches here. So the whole area from here to down here is support, and if it's like this, what you do, you can draw 2 lines and you get the whole zone of support in this area, and it's easier. So if you're not used to it, otherwise you do it like I do it. I just draw a line in between those between this area, and it looks like this. I still know that I have something here and here, support here and here. So actually what we need is a big green candle that would bring the price back into this range in channel, correct? And then we can look for lower time frame bounce trades and target the highs again. CHF yen, and this is just going up and up and up. Yesterday we said would be great if we could have a red candle, and then this is tempting for shorts, but you see the candle has to close first, and it decided to close green and still moved up. So there is nothing. If the 36 EMA is not breaking, you can only focus still on your longs, or keep your existing longs. Okay, that's what you ideally would like to see, or a daily red candle, and then we can slowly approach this for shorts. Aussie CAD still going down. Yes, we had a range there a little bit. 200 is still over the price. We still have daily 1 2 3s, right? The daily 1 2 3s are there, and as we said yesterday, you cannot do much. You just leave the stop over the resistance line in case you're short, and it looks right now that patience again, pace, it looks like it wants to move lower. So still only shorts here. Okay, so far I think we analyzed everything in 10 minutes. It's great. Should we start with our hedging, or do you have anything you want to talk about first, like for instance some positions you have maybe running, or something you want to ask about your own trades? Yes, about the videos. Gail sent over 2 new videos with her trades and her thoughts and everything, and I will try to upload it afterwards. Okay, try to, maybe a little bit later on today. What else? So should we start with hedging? Okay, we will also use some of your examples, but we'll just take a pair, the USD CHF. I got in past some emails asking about this particular trade and how to hedge this and why to hedge this and all that. So let's start with a weekly chart. Okay, I don't know if you remember, but we took shorts down here at some point, trying to get this big swing trade going here, and we targeted this area. Of course we expect retracements at some point, but this retracement actually came earlier than expected, but that's okay. I mean, it's still going down at that point. Okay, if we switch to the daily chart, you'll see that we had a break. We had the weekly 1 2 3. That's the weekly 1 2 3, and we had also 4 hourly and 1 hourly setups here. let me switch to the 4-hourly chart. It's probably easy. Here we go. Yeah, we had this 4-hourly setup, and we had another one here. So we took this, and some people took that, combining actually the weekly chart instead of the daily with a 4-hourly entry. We had bounces on the daily chart, we had this big weekly 1 2 3, and then shorts. And of course, when you take a trade on a 4-hourly chart and the price is moving quickly, then it will make profits fast because you have a smaller stop compared to the daily chart, and the price hit both targets quite quickly. And then we had a win-win situation. And then it's getting a little bit tricky because of course nobody wants to give back profits, and that's why we have the rules. So if the weekly chart told us to go short, okay, and the 4-hourly gave us an entry, and because that was still a range, we had a lot of lows in this area, right? This low actually was the one that made the price retrace. But okay, a long-term view was the support down here, and later on of course the lows here and here. What we said is, okay, now that we have a weekly 1 2 3 and we got an entry in the 4-hourly, because of that weekly chart, we might see daily 1 2 3s as well later on, and it would be better or wiser to manage this trade on the daily chart than only the 4-hourly chart. Correct? Classic stuff, nothing new. And that's what we did. And at some point you had with a 70 pip stop, price went down about 300 points. And you know that when that happens, that the price is going down 3, 4, 5 times your stop, it will at some point retrace on the higher time frame, right? Trying to find the 36 or the 12 resistance line you have in place, and that means that you have to give profits back on the retracement, but only to make more later on if the trend is strong. And because nobody knows if the trend will continue, it's kind of a mind game. It's a little bit tricky. You're like, okay, yes, I could wait, but I see 300 pips. It's a win-win situation. It means I cannot lose, but there's always this but, right? Why not taking the 300 pips or 200 or 400, 500 and wait for the price to go against me 300 pips again, or close to break even? For some people it doesn't make sense. If you of course look at the bigger picture, it makes totally sense, because you are aiming for much more on the higher time frame. It is just that the little devils in the brain always try to convince you that it's probably better to do something about that, right? And usually taking out profits after 200-300 pips because it looks like a retracement is the wrong move, because for some reason you do that, then the price moves your way afterwards another 1,000 points, but you're not in the boat anymore, right? That always happens. Okay, poor Eric. So what do? There is a little thing we call hedging, right? That can get rid of all these little devils and bad feelings and probably stress. And first of all, why do we hedge? That should be the first question. We don't hedge because it sounds sexy, right? We do it because we do it for a reason. And I think the first reason, to be honest, is we hedge a position because we are afraid to give the profits back to the market, right? To be honest. That's the first reason. We hedge up a position because we want to lock in profits and feel a little bit safer. Correct? Do you agree with that? Okay, the second reason is to make profits on the retracement. And that is actually the most important reason, and the reason that actually helps a lot. The first one is just a mental reason, and it helps your psychology actually, and sometimes even your trade if it's not going your way anymore, and you say, okay, I'm happy or I'm lucky that I did it. But it's more mental thing, because actually if you get rid of that first reason, the second reason is the one that makes a lot of sense, because it will also grow the account a lot, right? If you do it correctly, and if the trend is very powerful and strong. So you are short, as we said. The price is going down 300 pips in this case, and or what is it, close to, yes. And now it looks on the daily chart, I have to go back to the daily all the time so you understand, you will expect a bigger retracement at some point. You don't know if it will happen here or down here, but when you look back on your daily chart, you see that on average, when the price lately after it crossed and everything, after moving down after 200, 240, 250 pips, it started to retrace always, right? And here we have a big move of about what, 400. So if you check your daily chart and you say, okay, let's see, this moved down 500 now. Would it make sense that the price retraces if it's also hitting, of course, some support areas coming from the daily and weekly chart, which it did? Makes sense, right? So at some point it should retrace. And what you can do about it is hedging up so you make profits on the retracement back to the 36. And in this case, you see, because the price is moving kind of smoothly, the 36 is not that far away. Yeah, from down here. Check at that point, like 180 pips. You say, okay, I don't want to give back more than half of the profits. I want to hedge it up. I entered on the 4 hourly, so I can also hedge up on the 4 hourly, right? Or on the 1 hourly, it doesn't really matter, but you want to do that. So what do you have to do? You have to go back to your 4 hourly chart. You have to see the price actually breaking the 36 and creating a higher low, sometimes like here also higher high. You don't get that every time, but it would be great if so. You don't have the crossover, but you have a higher high and you have a higher low, because after that you get a green candle. And what you could do at that point, let's say you entered here or here, it doesn't matter. You say, look, right now price went down 320 pips. At that point where it says hedge me up, it's 240 pips. So if I hedge this up, okay, and the price reaches my 36 CMA, I can make all that is kind of lost on this retracement back, probably more in this case, okay? And if the price decides to move lower, I make more later on anyway. Correct so far? And that's what happened. We get a higher low, we got this. We had a stop for about 40 pips or about 80 pips, and you don't need a stop if you hedge up with only one lot, because you have one lot short and you would go with one lot long to take advantage of the retracement. Only if you wanted to trade aggressively against the main trend, taking 3 lots, taking out the first 2, and then manage the last lot again as your hedging trade. Then you would have to place a stop, and as we call it, account protection order, right? APO below 0.3 normally, with a small stop for the first and second lot, and leave the third lot without a stop because you're hedging up the short anyway. Okay, so a classic hedge is just this one position, and in this case it would make sense because it's not a huge retracement. It's not that the price moved down 1,000 pips and never retraced, and you have a big buffer from your 4-hourly setup to the 36 or to the 200 in this case. Yeah, it's only about 100 pips, and that's why it's better to hedge it up just with this one position. It's not like a great opportunity to make a lot of pips with the first and second lot and then leave the third lot forever. Okay, so now if you do that, I will answer the question later on. Okay, if we do that and the price is reaching resistance, you start watching closely and you draw your line, and if the price, you see it has trouble up here, breaks that line, okay, you can do it on the lower time frame, or you can actually also wait here, and if it's breaking this area, you get rid of your longs and keep the short. And if you miss out and you have to wait for the candle to close, and here look what happened, it actually came back to where it started, and if you close your longs here, you didn't make any profits at all. But what you did, you locked in the existing 240 pips, and now you start making profits again on the short. So even if you don't make a lot of pips on the retracement, worst scenario, usually you end up break even with that hedged position. Then you get rid of your long in this case and make profits again on the short, or you wait of course for 1, 2, 3. In this case it was not easy to spot. Here you get one and then an entry here. Okay, retracement to the 12 EMA, or maybe on the lower time frame on the 1 hourly chart. But ideally you want to try close and below the 36 if it looks really like it wants to break. As long as it's creating higher lows there and it didn't touch resistance, then you just wait. Yeah, sometimes you even have to wait for the price to create a big 1, 2, 3 way below your entry, but it doesn't matter. You are hedged up with all the profits since here. Okay, so classic break of the support line, and you see on the daily chart this is a big 1, 2, 3. That alone is reason enough for you to wait for the bounce and now get rid of the longs again. Okay, and then of course you can do it again. Price moves down, that point reaching almost 400 pips, and if you check your 4-hourly chart, let me go back, you had another break, you even had a crossover, and this one looks smooth and powerful, and you had even a 1, 2, 3. After the crossover you have a lot of support, so you're hedging up the position here again. And now on the daily chart the target is much bigger, right, because the price moved down another 300 pips, and if you measure it's about 200 points before it's reaching the 36 in this case. Yeah, it's a little bit steep. You can say, okay, great. And what happened here, the price actually broke the 200. There was no setup, no bounce, you know, higher highs, higher lows. So great, now you are hedged up, and you make a lot of profits on the way up. And on the daily chart the price broke the 36 and hit the line on the weekly, and now you have, what do you have again? You have a weekly 1, 2, 3, and it was Rosalie sending this chart, right, about USD CHF hedging short, hedging long against the short. And here what happened, the price again reached the 36 on the weekly chart. Okay, and the weekly chart was the first reason we looked for shorts. Anyway, now the price hit resistance. You're hedged up with your 280 pips or something, whatever, and now the price actually made you a lot of profits on the way back up. And afterwards what happened, it bounced there. And if you want to be conservative, you need to wait for that break again, right? After the weekly 1, 2, 3. And here's your daily retracement. And on the 4-hourly chart, again, you got after the break another 1, 2, 3 below here. And then you say, hey, I'm giving back again all the profits I made on the way up here. Like I gave back another 140 pips, but you're not actually, because remember, your swing short is making profits again. You're still hedged up with your 80 pips. Yeah, the one you hedged up down here. So at that point, you get rid of the long, take whatever is left, in this case about 100 pips only, but now the short is making profits again, and right now it made another 200 something pips. So from up here where you originally started, or Rosalie did, hedging up twice, still being in with about 400 pips and milking the market on the retracement. Okay, and this was a little bit a complicated example, and that's why I wanted to use this. Did you all understand what I said, or the reason we hedge and where we actually did it and why? Is everybody okay so far? As I said, ideally with this one position. If not, if you want to trade actually against the main trend and you see, you have a lot of room, then you can do it with 3, like trading against the main trend, like a separate position, managing the first and second lot according to the rules, and then just keeping the last lot open and use it as a hedge. Great. So the question was, do you hedge on the 4-hourly and daily only, or also on smaller time frames? Yeah, as I said, you can do it on the 4-hourly if you combine it with the daily. If you don't get setups there or the price is too volatile, you can also do it, of course, on the 1-hourly. You can even go down to the 5-minute if you have higher time frame setups, 1, 2, 3s, right? And then just leave the remaining lot running. And manage it, of course, ideally on the 4-hourly chart, and later on, if possible, on the daily chart. Okay, now we can use, I think we have the recordings where we talk about John's USD yen hedge, right? So we don't have to cover this again. I think we have it all recorded. Is that correct? I don't remember, but I think we used this example already. Is that correct? Yes, no? Okay. We can do it quickly if you like to then, because it's also a very good example. It was our wedge on the daily chart. Remember the weekly chart, price moved up, price was ranging here, and that's actually a good example because Jean is Jean here? He's not there. Wow, what happened? He took the long, right, on the bounce, because there was bounce trading. It was a combination of bounce trading, swing trading, and hedging. And on the daily chart you can see we hedged up, I think, since here, and sorry, we bounced here, bounce traded here, and here, but then because the range was getting small, John actually took the long, right, hedged up shorts, and then after the bounce kept the long and get rid of the shorts, if I remember correctly. And if you go back to the 4-hourly chart, that was the the long he took, right, after the short. And he got rid of the shorts, kept the long, and actually, I'm not sure, I think he hedged also up. He took the bounce again, he also took some shorts again, and then got rid again of the shorts and kept the long. But I'm not sure, he's not there right now. It doesn't matter. So he hedged up in the range, and kept the long in the end, and it broke out. And since then he has this one long position, trying to manage it on the daily and having the target up here. That was the target from the beginning down here, and we all tracked this trade together live, right? So it was not only him, but that's he recorded the video, sent over all the charts. So that went up 600 pips with a really small stop down here on the 4-hourly chart in this wedge, and it's still long. So another good example. Now that the price is still creating higher points on the chart, no reason to hedge anything up for short, right? If you look at the 4-hourly chart, yes, the price came back. There were some aggressive shorts, but then no 1 to 3 below here. So the price did not stop, it did not move lower, went up. So no shorts right now. Still longs, longs, longs all the time. Okay? What about hedging this up to the downside? How would you do that? This is the 4-hourly chart. Look, price reached major resistance. It could move up probably another 56 or even 100 pips. But if it's showing weakness at some point, how would we hedge this up? We have to draw the line on the daily chart. This is the guide. The 12 is the guide in this case because the price was just too powerful. Now the 36 is now a target actually, if the price wants to retrace more. Now on the 4-hourly chart, we can track the volatility, actually the price action. And if the price wants to come down, let's say this is a lower high, right now we're still focusing on possible higher points. But if that ends up doing something like this and breaks down with a big red candle, then we can use it to aggressively hedge the big long trade, right, against the main trend. Or if we want to be more conservative, we expect to at least a 1-hourly setup below here, at least a 1-hourly setup below here, and then hedge it up, meaning being long and short. And if the price wants to retrace that back to the 36, we can relax. We don't have to panic. Whatever happens down here, the position is locked in with a lot of profit. So if it's spiking here up and down, or if it's breaking the 36, even if it's just crashing, trying to reach major support here in this area, it doesn't matter because we are hedged up with about, let's say, 500 points. Okay, and let it go down another 2, 3, 4, or even back to where it started, it does not matter. You still make 500 because the short will make profits and the long will just lose profits, but it doesn't matter. Okay, now the thing is, if the price hits support, okay, and it actually moves higher and you get the green candle on the daily chart, or your 1-hourly, 4-hourly, 1 to 3 higher high, higher low, of course you can get rid of the short, take whatever profits you made, and now the long starts making profits again. And in case it doesn't go much, or it's creating another lower high and goes lower again, you hedge it up again. Worst scenario, you ended up where you started, hedging it up here in terms of profits. Okay, but you won't lose anything. That's the little trick, and it's really actually easy once you do it. If you practice it 2-3 times, it's really, really easy, and it's something not many people do correctly, because when people hear hedging, they always think, okay, they listen, or they think hedging means, okay, going short and long at the same time. So what's the deal? It does not make me any profits, right? One position makes money, the other is losing. The only thing happens is you're paying rollover or swap, right? And that's what you need to understand what hedging means. We only hedge a position when it's very, very much in profit, right? So it's a profitable position. It's a win-win scenario. And what you just actually do, you maximize profits this way, take advantage of the bigger retracements, and make money on both sides. Okay, it's not like, okay, I don't know what to do today, let's go long and short at the same time, and some position will make profit, the other will lose. But if I look at my account, I like to see that this one position is in profit. It doesn't matter that the other is losing, I can close it at some point, and then maybe I decide later on if I want to, how long I want to leave the winning position. That is something I think many people tried in past, going short and long, or having a losing position for a while, not knowing what to do. You don't want to put in a stop, so you just hedge it up and decide later on. You can do that, but it doesn't really make any sense, because if you lose, let's say 50 pips, and you hedge it up at that point, even if you decide later on, you will still have the 50 pips loss. Okay, it doesn't really matter. So hedging only if it's a win-win scenario and you want to make more out of it. It also removes stress, because you know you have a winning position, and you hedge it up wherever you like, you will always make profits. Yeah, and if your scenarios work out and the price retraces and you get rid of the hedged position and the trend is strong, of course you make a lot of profits on the retracement and then on the continuation of the trend. And that's the nice part. And I think Gail and also of course Jean did a video lately explaining what he did, and you should do the same, because if you do the video, or at least screenshots and writing things on the chat, you will remember and you will do it again. Okay, so who wants to share a personal experience or example? Who wants to do that? Is anybody here who is trying actually to hedge up a position, existing swing position these days? Is anybody there watching for an upcoming hedge trade? Anybody? I think yes. Don't be shy. Yeah, Gail said, I'm just waiting for the GBP CAT. Edward is probably waiting GBP JPY. Anybody else? What about Dimitri? Do you have any? Okay, Kathy waiting for CHF yen. Cool. GBP Aussie. There we go. We have examples. That's it. Well done. And do me a favor, if that happens, or do yourself a favor actually, and me. Record the videos, record the hedging position, see what happens. Okay? And track it. And yeah, you send over, Edward also sent some videos. And yeah, Gail has sent 2 videos actually. it's what she's thinking about what she's thinking about the GBP JPY and the GBP CAD, and about how to hedge it later on. Dimitri says, I hedged my Aussie US dollar possibly from the daily chart. Okay, there we go. Let's check this. Australian dollar, US dollar on the daily chart. You mean if it hits support like down here and you get a bounce, you want to hedge it down here? Okay, yeah, it's actually a good idea. It's a good idea. Switch to the day weekly. Yeah, it's really just, hopefully it can move lower and hit the 633. Of course, I'm just saying it because I have the short position. Otherwise, of course, would be great a hedge, but it would be actually much better if the price could go down, move down to the week monthly support down here, just moving another 500-600 pips. But of course, for now, also the 633, about 300-400 pips. If the price could move down to here, then I would love a hedge back to the 36, because if you look at this from down here to here, you'll have like 500 pips probably. Okay. And yeah, GBP JPY, as we said, look, it's going up right now. Okay, it's going up even on the 1 hourly, just exploding again. This is a crazy pair. You have aggressive 5-minute setups here. Actually too early for me, because it was a really good one. You see where you have come on, I have to zoom in that thing. Look here, you have this break of the 200. You have your 1 2 3 exactly. You have one here after the crossover, but still below the 200. Then you get that one, and actually the entry is exactly over the line, and with a stop of about like 15 pips, this exploded up 80 pips, right? It's a great intraday setup even, right? To reinstate existing swings, for instance, was a very, very good example. Now also look at this. To hedge it up, what you need, as we said, is the lower high, actually a 4 hourly, 1 hourly below here. If you get this, or aggressively, if a big candle or candle breaks that 36 after the lower high, then going short, hedge up the existing longs with probably over 1,000 pips. Can anybody tell me how to spell this name? Sorry for that. I write it down. I mean, maybe you record it for me and send it over so I can listen to it. How do we say this name? Baldwin? Or Balduini? Sorry, I just don't know the name. Probably Baldwin, right? So, is it a he or a she? It's not in the room, so I can ask. Probably it's Baldwin. Maybe it's the same. It's maybe a different country and they write it differently, right? Okay, so it's a guy. I think it's the name. Actually, so what because I will try to post that as well, because I got so many charts lately, and as I said, today is our last day, and I have so many things to do that I can't keep up, sorry. But Baldwin has sent the chart where he actually took this entry on here, this daily 1 2 3, and actually taking this trade, if I'm not mistaken, on the 1 hourly chart. Let me switch back Baldwin or Okay, let me go back. So here we go. So probably the 4 hourly, or maybe on the 1 hourly look better, I'm not sure. This one. So even on the 4 hour it was a stop of about like 150 pips. I'm not sure, let me see if I can get it on the 1 hourly. There we go. No, probably the 4 hourly, this one. What happened, he took this with a small stop, as I said, and the last position is still running, so it's from here to here is what, 1600 pips, right? And the same question, he did not know what to do with the trade, and I just said, look, you knew what to do so far, so you should know what to do now, right? It's, I mean, if you can hold a position since summer, after all that, it shouldn't be a problem to manage it again, right? So here, hedging it up only on the 4 hourly chart, and it's a very powerful great trade. It's like the one Mark has and Edward has and some others. It's the same thing, right? If it goes down, okay, hedge it up, keep the 1000 pips or 1500 pips and let it retrace. And if that's retracing, it will probably retrace at some point for good and really reach the 36 or lower. So that means you could make a lot of profits on the retracement, right? Because the weekly chart could at some point, if it's still going up and up now, it will be a good opportunity. Just draw the lines. Forget about what the news say or what everybody else says. Just look at the chart. It's telling you already that the price go back to here, make another 1,500 pips, for instance, right? If it goes up, just keep the longs or reinstate the longs, or that's a very good example, and it will happen at some point, and we don't want to miss out the shorts on GBP/JPY, USD CHF, or was it CHF yen, sorry, and all these other nice trending pairs, right? And here, look at this, it's just wonderful. Weekly up and up and up, so what a powerful trade. So it could still go up more. Look at this monthly chart. And I think at some point when it retraces, it will retrace quickly, at least the first days, okay? And then we want to make sure we have a position on that retracement. Of course, the longs are powerful as well, so everybody being long here should still focus on the longs. But if we get the first signs, if the chart is actually shouting and telling us that it wants us to sell it, then we'll do it, of course. Yeah, this is like actually the chart asking us nicely to sell, and we want to be polite and sell that, of course. Yeah, it's a very, very, very good opportunity, probably very, very soon. I mean, very soon, I'm not talking about in a day or two, but hopefully soon. If it's not that week, then maybe end of next week, or just watch it closely. We have opportunities to hedge against the main trend here. I remember in the past when we just traded all day long, and even during the night, waking up and checking the positions, and some of you probably have done that. That is really not the way to do it, and the more you do that, the worse it gets, right? So yeah, there will be actually, as you said, shitty trades. Yeah, exactly. So But as I said, I'm not talking about, you know, trading all day long, but swing trade positions like those, like this example here. Big retracement trades, if we get a good signal, we can go for it, of course, once or twice before the holidays. But that's about it. I will try to update the blog. I will also try to send out weekly analysis video before I leave, because I haven't done that lately. And then I'll leave you to it for about 2.5 weeks, and we catch up again January 8th, and we'll also do about a 2 or 3 week, or probably a month, depending how long it takes, Renko bar live course with the indicator, the alerts, and also record everything. Okay, and also I will send out some emails soon when we have this program ready, end of the week, I guess, where we have instead of a monthly payment, a one-time payment for people that just want to stick around with us. Okay, so I hope you enjoy your trade still. You still send over your emails, charts, and videos, of course, and it could just be that I won't reply as quickly as I usually do. I will check my emails, but only once a day, and then you probably have to wait a little bit for my reply over the holidays. Okay, so have a wonderful Christmas, and hopefully Santa Claus brings you some nice presents, and best wishes for the new year, and I hope you have your goals ready also for 2014, and I wish you a million pips, of course, and fun doing it also. Yeah, so thank you for your wishes there. Great, and I'll catch up with you soon. I'm also uploading the video later on. Yeah, bye to everybody. See you soon. And if you need anything, of course, send me an email.